Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and after making a new lifetime high on the Sensex Nifty and Bank Nifty last week, the markets have kind of started to consolidate, and whatever correction we saw last week, a spillover effect this Monday morning, and of course the correction might possibly stay here for some time, given the fact that we have made an all-time new high and markets normally tend to consolidate for a while. And of course, triggers that lie ahead. So before I go on to the triggers, let me just familiarize you with the levels on the Sensex Nifty and Bank Nifty. So Sensex is down 220 points, 62,650 is the level on the Sensex. Nifty is down about 60 odd points, 18,635. And a little bit of recovery from the lows on the Nifty Bank, 43,170 with gains of about 70 odd points. On the rupee dollar equation, slight weakness on the rupee after gaining strength. The level is 81.55 rupees to a dollar. And on the energy basket, down tick for last week, but a minor uptick this morning. Brent is at about $86.27 per barrel, and NYMEX is trading at about $80.62 per barrel. So these are the levels on the index, rupee and crude oil. On the triggers that I was mentioning, well, we have credit policy this week, and of course the state election outcome as we go into the week. Credit policy, on the credit policy front, the general consensus that has gathered into the market is about 0.25 to 0.35 basis point hike in interest rates. And of course, what will be watched very carefully is the commentary from the RBI governor and the views of the Monetary Policy Committee. Possibly a pause is what one expects, given the fact that inflation was at a 3-month low. So maybe after an increase of 0.25 to 0.35 basis point in this credit policy, one can expect a pause if the triggers, especially on the inflation front, the data is a little bit on the comforting side. So this is what the triggers are. These are the triggers that the markets would be watching. And of course, the outcome of state election, markets would react to it maybe. But that reaction, according to us, could be short-lived. We may get back to the basics once the events are done and dusted. The correction that we are witnessing right now after the highs that we saw last week is given to the markets, and it's always prudent to have these kind of consolidation zones. You remember last week or a fortnight back when we were discussing about the market, and the market was actually in a consolidation zone. And that zone was about 18,000, 18,200 on the lower side, 18,400, 18,500 on the higher side. I'm talking about Nifty spot. Excuse me. And once we were able to cross over to the last time highs, I think we managed to make a new all-time high. So I think one has to give it to the market. Runaway rallies are not something that you could possibly expect in the in this kind of a scenario. But yes, coming 2023, our sense is that possibly then, of course, you will be looking forward to the budget and the expectation from the finance minister and what the details have to tell us. So in and all, I think we could possibly consolidate. In the current scenario and the backdrop of events that are lined up, we don't expect Nifty to break 18,200, 18,400 on the lower side. And as I mentioned, that was a strong base. Almost about 2 weeks or so we were consolidating in that zone. So that's a base that has become. And as we slip lower, maybe today, tomorrow, then I think it's going to be great opportunity to nibble into some fundamentally strong investment ideas. And like always, we share two of them. this time, again, we have two investment ideas on the fundamental side from a long-term point of view. And the first one is, of course, Ambuja Cement. Huge uptake is what we expect as far as offtake of cement is concerned. Be it government spending on infrastructure projects, be it the recovery in the real estate sector, or the capex which has been lined up by the private companies. And of course, there is a possibility of an upward revision of cement bags, is what our anticipation is. The fact of the matter is that in the second quarter earnings gone by, most of the cement companies have reported that their margin pressure has now thing of the past, and the input costs which was hurting the margins have stabilized. So we can expect a steady third and fourth quarter from the cement sector. So Ambuja Cement is one of them. And the second pick is in form of Bata India, one of the largest footwear manufacturing companies with a tradition which speaks for itself, have reinvented themselves in terms of product offering, right from kids to youth to mid-age to formal wears, be it male or female products. They have huge offering. Even senior citizens, they have diversified product profile. Our sense is, of course, that given the policies from the government also, I think this sector is definitely going to see renewed earnings in terms of good sales numbers, which will translate into a decent profitability. So two investment ideas, Ambuja Cement and Bata India. Mind you, again, I will repeat myself, these are investment ideas. These are not for short term, medium term. These are fundamental investment ideas from a long term point of view. And by time frame definition stands at least a year and a half to longer the time horizon, the better it is. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.